Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Upping the pressure. President Trump attacks Jay Powell and calls on the Fed to immediately cut interest rates. Asian stocks trade flat after a sell-off on Wall Street. Bloomberg learns the US will hold talks with Ukrainian and European officials in London tomorrow in the latest push to end Russia's war. Plus, Tesla tumbles, shares in the EV maker under pressure ahead of earnings today as investors question Elon Musk's role in the US government. Good morning, happy Tuesday. So the Sell America theme took centre stage yesterday with a sell-off in equities, 2.5% down on the S&P, 2.5% down on the Nasdaq 100 by the end of the close. Yields up on the long end and the sell-off again in the dollar. And you're seeing that being reflected across the strength with the Japanese yen and the euro in the session today. European futures pointing lower then as a reflection of the handoff of what we've seen in terms of the US picture yesterday by the end of the close. Currently pointing lower, European futures by 0.5%. Here in the UK, the FTSE 100 pointing lower by 0.3%. S&P futures a little higher on the session, currently pointed to gains of 0.4%. The Nasdaq 100 also looking to add about 60 points. Let's flip the board and have a look cross asset then. The currency is very much firmly in focus, as of course is gold, punching through a fresh record high. The yellow metal currently at 3,483, closing in on 3,500, currently up 1.8% in the session. The benchmark 10-year having seen yields up again yesterday on that sell-off, 442, yields up 1 basis point in the session today. Euro dollar at 115. This is all about, of course, President Trump taking fresh aim at Jay Powell at the Fed. We will unpack that story for you in detail in the minutes ahead. Brent at $66 a barrel, currently up 0.7% on oil. Let's quickly check in on the Asian trade as well. You're seeing strength again, as I mentioned, in the Japanese yen. That's putting pressure on the Nikkei, currently down just 0.1% for Japanese equities. The yen currently at 140, up 0.5% versus the US dollar. Japanese Prime Minister coming out and saying we're not going to continue to concede indefinitely when it comes to those negotiations with the US on trade. The benchmark over in Asia currently up just 0.1%, and over in Hong Kong you're seeing losses of 11 points so far in the session. Now, President Trump is, as we've mentioned, stepping up the pressure on Fed Chair Jerome Powell. The president warning the US economy may slow if the central bank does not immediately reduce interest rates. Joining me now is Bloomberg's Jill Deasis. Jill, is this a president who is laying the groundwork for blaming a Federal Reserve on any slowdown, any recession in the US? What have we been hearing in terms of President Trump's latest attacks on Jay Powell?
Sure. Well, look, Tom, I mean, it's not new that we've seen Donald Trump in the past muse about the prospect of removing Jerome Powell from his position. Of course, it gets a little complex into how exactly that may happen. But what we're hearing now is that Trump has actually been talking privately with some of his advisors about making that a reality. And certainly publicly, Trump has said a lot to, cast, this idea of the need for Powell to cut interest rates immediately. He called him a major loser. It's implied that he's been too slow to actually make this happen. Of course, on the Fed side of this is these concerns about, whether inflation is actually going to continue slowing. Of course, many economists suggest that Trump's tariff plan is likely to increase price pressures, at least in the short term, and at least, for at least a little while there. And so that really does kind of, come into that central tension here that's evolving between Jay Powell and the president. Whether Trump is actually able to then remove Powell from his position, whether that means as a chairman or more widely as a member of the Federal Reserve, I think is still a very complex question here. But it does seem like Trump not only is now in power using these questions again, but also is exploring the possibilities for doing so.
How do we understand the potential damage this does then, Jill, to the Fed's independence?
I mean, that is, again, an ongoing question here, Tom. And look, this has come up several times over the past several years. I mean, Powell has in the past said that he would refuse to resign were he asked to do so by Trump. Again, as with many things involving this latest Trump presidency, Trump 2.0, it invites a lot of different questions about, levels of independence, elsewhere throughout the government, whether you actually see some of those, how exactly these institutions evolve. So yes, I do think that kind of creates that open question there. But again, this ultimately does kind of come down to, what Trump actually does moving forward, how exactly the Fed responds, what happens at the next FOMC meeting, and where we ultimately go from there. But again, as with a lot of things involving this presidency, there's sort of seems like we're setting new precedents at pretty much every moment.
Yeah, indeed, and seen by some at least as another catalyst for the Sell America theme that is rippling through the markets right now. Bloomberg's Jill says thank you for the update and what we've been hearing from the president in terms of his views on the Fed chair, Jay Powell. Talking of which, President Trump's broadside, of course, against Jay Powell and the uncertainty around tariffs is challenging US financial dominance. Bloomberg's Valerie Teitel has been looking at this. Valerie, talk us through the market reaction then to what we've been hearing from the president when it comes to the Fed.
Look, yesterday's session was another rare example of a across the board fleeing of U.S. assets, whether you look at the equity market, whether you look at long-end treasury yields or the U.S. dollar. These assets moving lower in tandem, Tom, is not something we see often, if at all, across U.S. assets. We're now continuing to see it. It's becoming more of a trend, and that is alarming to some investors globally. Take a look at the chart behind me. It's charting the rise of 30-year yields alongside a fall in the U.S. dollar. Tom, this is charts that we showed up during the Liz Truss episode when people were fleeing UK assets. Now it's taken place in the U.S. in the safe haven currency of the U.S. dollar. Not something we see often, and again, raising alarm bells for investors globally. There does seem to be some beneficiaries, though, across the globe to fleeing of U.S. assets, one of those being the euro. Take a look at what the euro's done since April 2nd, Tom. It's up near 7%. We're now close to the 116 handle on euro dollar. So it does pose questions. If investors are fleeing U.S. assets, where are they rebalancing to? It seems like the yen, the euro, and the Swiss franc have all benefited from this risk-off trade.
OK, Bloomberg's Valerie Teitel, thank you. In terms of the market reaction to the uncertainty when it comes to the future of the Fed chair, of course. Let's get more in terms of a deeper dive on that market reaction because, of course, the political uncertainty is helping to extend that blistering rally in gold. The yellow metal up 30% now year to date, gaining almost 3% by the end of close yesterday. Let's bring in Bloomberg M Live strategist Mark Crownfield in Singapore. Mark, how should we understand the rush into gold? Fresh records again. Is this one of the few safe havens as investors, at least some investors, unwind from US assets?
It appears to be the only place that everyone agrees is a good place to put your money right now. And there's a number of reasons for that. So one of the things that is supporting gold is a general failure of financial assets. Whenever we see that, that typically is very good for people that respect gold. And you're seeing that, as Valerie was saying, both Treasury bonds, the US dollar and US equities all sliding at the same time. That is very disconcerting to global investors, so that supports gold. You also have a situation where the US dollar itself is the major reserve currency in the world, but people are obviously exiting and gold will clearly be a beneficiary. Central banks have been seen consistently buying gold, so again, another support for the yellow metal there. Then you have an uncertain geopolitical situation as well, which typically is a reason for going into gold. To have all those things come together at the same time is extremely unusual, and that is helping to fuel all of this move into gold, not to mention that the retail sector seems to love gold as well. So you have it coming from all different directions, and all of it is building to give you a reason to stay with gold. And the performance, if you look at it since even going back to the global financial crisis, gold has done consistently well, beating most other asset classes. So clearly it has a track record, it is somewhere of a haven, and it keeps on proving that it is a place that people want to keep their money.
OK, multiple catalysts for gold. And the spread, in terms of the ratio of gold prices versus silver, is at extreme levels we haven't seen, or we rarely see, at least. Does this suggest that silver has a run to move higher as well? Is there a catch-up trade for silver?
Certainly, you have some people looking back to the beginning of the COVID pandemic, when the spread between gold and silver was something like this. Actually, it was a little bit wider than it is, but it's the most extreme case since that 4 or 5 years ago period. But the difference this time around is that the gold has this track record with central banks. Silver does not. Silver is a much more speculative kind of play. We've seen in the 1970s, 1980s, short periods when silver outperforms, but they tend to be quick and over and done with. And if you're not involved quickly, you can get caught out very badly. Gold is much more of a long-term play. It's quite possible if gold, let's say gold pushes to $4,000, then maybe people will think that silver can only go one way, it will have to catch up. But we haven't reached that kind of target yet for gold. And for now, the big money, the serious professional money, is mostly sticking with gold. But yes, on a relative basis, silver is certainly trying to look quite attractive. It's underpriced in relation to its big brother, but it may stay underpriced for quite a while yet.
OK, not everything necessarily lining up for silver, and it could be short if we do see that upside. Bloomberg M Live strategist Mark Cranfield, thank you very much indeed. Breaking down the market reaction to the sell-off in US analysis and the gains again for gold at a fresh record high. Goldman Sachs sees $4,000 per troy ounce by around the middle of 2026. A redhead crossing the terminal in the last few minutes. Roche, of course, the Swiss pharmaceutical giant, pledging to invest $50 billion in pharma and diagnostics in the US over 5 years. You will assume that this will be welcomed by President Trump and his team as they look at potential additional tariffs on the pharmaceutical sector. Will that do anything to adjust the policy prescription when it comes to tariffs on that particular sector? Roche saying it will be investing to create more than 12,000 new jobs, 1,000 at Roche and more than 11,000 in support of new US manufacturing capabilities. So an investment pledge there and commitment from Roche, $50 billion, including new R&D sites in the United States. Here's what else to be thinking about this week then. Today, the IMF and World Bank meetings, spring meetings kick off in Washington. What a moment then for leaders in terms of the IMF and the World Bank, given the ruptures we've seen in global trade and the attacks on the Fed chair as well. So a crucial set of meetings, which we will be covering for you, of course. And then on the earnings front, Tesla, given the losses in the stock year to date, concerns about the China market, concerns about consumers turning away from this brand, at least some of them. That company at focus with earnings later today. And we'll be hearing, of course, from Elon Musk, expected to be on the call. And on Thursday, we get earnings from Alphabet, parent company, of course, of Google. Those earnings coming through, and we will break those down for you, of course. How's the advertising business and search and, of course, the cloud business for Alphabet performing in this environment? You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. We're bringing you now live pictures from St. Peter's Square, Vatican City. We'll bring those pictures to you shortly. There they are, of course, after the Easter weekend. Catholics have been mourning Pope Francis, who, of course, died yesterday. We will go to Rome for the latest just ahead. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news this Tuesday. Bloomberg has learned that the US will hold talks tomorrow here in London with Ukrainian and European officials in the latest push to halt Russia's war. US Secretary of State Marco Rubio and Trump's special envoys Steve Witkoff and Keith Kellogg are expected to meet with the foreign ministers and national security advisors from France, Germany, the UK and Ukraine. Meanwhile, Russia has resumed military operations in the country after an Easter truce expired. President Trump says US Defense Secretary Pete Hegseth is doing a great job, despite what appears to be attacks from disgruntled employees. At least that is the way that the White House is characterizing the latest news on Signal chats. Hegseth is facing staff churn, a leak investigation and a report that he shared sensitive military attack plans in a second unsecured chat group. A former Pentagon spokesman says the Defense Department has been overwhelmed by staff trauma and turnover under the Trump administration.
This is what the media does. They take anonymous sources from disgruntled former employees, and then they try to slash and burn people and ruin their reputations. Not going to work with me, because we're changing the Defense Department, putting the Pentagon back in the hands of warfighters, and anonymous smears from disgruntled former employees on old news doesn't matter.
Well, tributes have been pouring in for Pope Francis after his death at the age of 88. Italy's Prime Minister Giorgia Meloni called him a great shepherd, while President Trump says he and the First Lady will attend the Pope's funeral. Bloomberg's Flavia Rotondi joins us from Rome. Flavia, what is next?
Good morning. Well, in the next few hours, we will have definitely some news. We will have, for example, the date of the funerals. They are likely to take place on a Saturday, this Saturday. But also, we might have an indication on when the conclave will start, probably the first week of May. Conclave is, of course, the event, well, the process where, you know, for the elections of the new Pope. Conclave, I mean, it is a secluded meeting, secluded session where the cardinals, more than 100 of them, will elect the new Pope. We will know, of course, later about more technicalities about this. Is a very complex procedural thing, but of course we definitely will have more indications also about the possible candidates. Of course, I've been circulating a few names in the last few days, but of course we'll have more names, indication about the front runners in the next couple of days and weeks.
Flavia, talk us through who some of those front runners could be then to be the next Pope.
Yeah, so at the moment we have a few names, for example, two Italians. That will be quite an interesting choice, going back to a Pope. You know, in Italy we have two possible names. One is Parolin, the current Secretary of State, and then we have Matteo Zuppi, who actually could be, this could be the perfect choice for those who prefer the Church to continue basically the kind of, in the spirit of the liberal also action and the principles that been actually the characteristics of Francis, of Pope Francis. On the other front, on the more conservative side, we have, for example, Leo Burke. That will be the first Pope coming from the United States, and actually he has been pretty vocal in the past in criticizing some of Pope Francis' liberal reforms. And also another possible contender could be Peter Turkson from Ghana. He would be the first black pope in modern history, and again it would be someone very close in spirit to Pope Francis. He also helped Pope Francis to write an encyclical on climate change, very liberal views on social justice, human rights. So again, that would be a sign of continuity. But again, we will see in the next few days and probably in the next couple of weeks, these names might change. We might have more indications.
Okay. Bloomberg's Flavia Rotondi in Rome, as morning, of course, continues in St. Peter's Church, St. Peter's Square in the Vatican, and the next steps, of course, for the Catholic Church. Thank you. Coming up, Trump piles more pressure on Fed Chair Jay Powell. We're going to take a look at what the president can and cannot do. That's coming up. Stay with us. This is Bloomberg. Now, some of the stories making the news this Tuesday. China has warned nations against striking deals with the US that could hurt Beijing's interests. The warning comes as countries prepare for talks with the US to seek reductions or exemptions from sweeping tariffs. In exchange, Washington is pushing them to curb trade with China and rein in Beijing's manufacturing power. The US has set new duties on solar imports from 4 Southeast Asian countries after a year-long investigation. It's found solar manufacturers in the region were unfairly benefiting from government subsidies and selling their products to the US at rates below the cost of production. The new duties affect Vietnam, Cambodia, Thailand and Malaysia. US Vice President J.D. Vance has discussed trade with Indian Prime Minister Narendra Modi in New Delhi. The White House says their meeting yielded significant progress and finalised a roadmap for a possible deal to reduce the tariff burden. The US has threatened to slap a 26% levy on Indian imports if no deal is reached during a pause that's due to end in July. African nations that were just beginning to get over a funding squeeze following the pandemic are facing a new surge in borrowing costs. President Trump's tariffs and plunging commodity prices have left many locked out of credit markets, leaving them to return to the IMF for help. We spoke exclusively to Zambia's finance minister about the impact of US levies. Take a listen.
Tariffs are relevant for us. Tariffs are important for us, and the reason being that an economy like that of Zambia, we are dependent on trade to grow our economy, to create jobs, and to uplift the welfare of society. In our particular case, the tradable goods that we depend on are mostly the critical minerals, the copper, the cobalt, the manganese, nickel, and others. Now, when you look at the trade war that is emerging, a lot of that involves manufactured items. And these manufactured items require these critical minerals that I just mentioned. So when the trading partners up in the north are not able to trade in those goods and services because of tariffs, automatically it means that the demand for these primary commodities that we produce gets adversely affected. I think in the past week we saw the price of our copper going down. So it is a matter of concern to us, and our plea or our wish is that these discussions can quickly take place, people negotiate, and we get to a state of stability, so that we are in a position to get back the best value for our commodities.
OK, Zambia's finance minister there talking about the impact of tariffs. There's plenty more coming up. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Upping the pressure. President Trump attacks Jay Powell and calls on the Fed to immediately cut interest rates. Asian stocks trade flat after a sell-off on Wall Street. Bloomberg learns the US will hold talks with Ukrainian and European officials in London tomorrow in the latest push to end Russia's war. Plus, Tesla tumbles, shares in the EV maker under pressure ahead of earnings today as investors question Elon Musk's role in the US government. Let's check in on the markets then. The Sell America theme really taking the lead yesterday in thin trade, of course, given the holidays in Europe. European futures now pointing lower by 0.7%. You ended down in the S&P and the Nasdaq 100 by around 2.5% by the close. FTSE 100 futures currently pointing lower by 34 points. S&P futures now after the losses of yesterday pointing to gains of 19 points up 0.4%. Nasdaq 100 futures looking to add 65 points. Let's flip the board and have a look cross asset because you did see yields high higher at the long end. The dollar selling off again at one point at the lowest level in about 15 months. And that story around strength for opposing currencies continues today with the yen in focus. 443 right now on the benchmark US 10-year with yields up 2 basis points again. So the sell-off continues on that 10-year that we know is so important to the US Treasury Secretary. Euro dollar at 115, the single currency up 0.2%. To what extent is this become a challenge for European corporates going forward? Brent at $66 a barrel and gold at fresh record highs after jumping almost 3% yesterday. The yellow metal gaining again today up 1.5%. as part of that safe haven play. Let's check in on the Asian markets then. The Japanese yen in focus. The redhead crossing the terminal right now because the currency briefly crossed through 140. You had a 139 handle on the Japanese yen versus the US dollar. Further strength then for that currency, up 0.6% so far in the session. Back above 140, but for how long does that hold? That's a challenge, of course, for Japanese equities. The Nikkei now down 0.2%. The Hang Seng over in Hong Kong gaining 0.5% broadly across the Asian Pacific region. Modest gains of 0.2% today. Now, President Trump claimed last week that he had the right to fire Fed Chair Jay Powell. His claim has pushed into the spotlight a 90-year-old Supreme Court decision, which is seen as the biggest guardrail preventing the dismissal. The 1935 case, called Humphrey's Executor versus the United States, had set a precedent for independent government agencies to deflect political pressure. Now its ruling may be in question as a new case makes its way to the Supreme Court. Valerie Teitel is here, our markets watcher, but with the historical context around this ruling and this guardrail. Talk us through the significance then of this case and the linkages between this case and the Federal Reserve.
Okay, so let's start with the basics. Humphrey's Executor was a 90-year-old Supreme Court decision which evolved around FDR's dismissal of an FTC chair who opposed his New Deal. Now, the Supreme Court ruled 90 years ago that the president did not have the power to fire independent agency chairs without cause, meaning that cannot dismiss these presidential agency heads purely for political reasons. Now, this has become the backbone for independent agencies across the landscape in the U.S. And since then, that landscape ruling has allowed them to deflect that kind of political pressure. What's happened now is that Trump's dismissals of 2 women back in January, that appeal has made its way through the court decision, has now reached the Supreme Court. Now, this case involves Humphrey's Executor. It was cited in the appeal as the precedent for that decision. And now, while these posts are lower than the Fed chair, they're not as powerful as the Fed chair, it's still a very important issue when it comes to the independence of these federal agencies. So this is now at the desk of the Supreme Court. They have, they've got the response from the appeals as of last week and could be looking to make a decision on this as well.
How binary is that in terms of the case, the outcome of that case before the Supreme Court and the future of Fed Chair Jay Powell? They rule against, they rule in favour. Is it as clear as that? Talk us through how that case is central to what happens with Jay Powell.
So overturning of this precedent of this Humphrey's Executor, it's quite murky on whether it has a direct impact to the Fed chair. And that because that we can look at just a previous ruling by the Supreme Court done in 2024 where the conservative Justice Sam Alito actually wrote a carve out for the Fed in the footnotes, calling the Fed a unique institution that has a special arrangement with history. Now, that means that essentially there is a something that the Supreme Court could harp on, that even though they overturned this ruling protecting the independence, that they could somehow carve out a special situation for the Federal Reserve. But, you know, flat out, reversing this Humphrey's Executor ruling could really embolden President Trump to take this next step. Even if we don't get the decision until the summertime, if perhaps the Supreme Court tells these 2 women to stand down from their post until they can take the whole merits of the case, that could be seen as a win for the Trump administration in pushing the next step to remove the Federal Reserve chair.
Yeah, as President Trump seems to be chomping at the bit to do that, maybe before the official end, of course, of Jay Powell's term in 2026. Talk us through that timeline then.
Okay, so the Supreme Court has gotten the appeals from the two women. That was last week on the 15th. It has been reported that they can make an early decision on the case sometime in the coming days on whether to allow these two women to maintain their post while they consider the big merits of the case. But the larger merits of the case are not expected to be heard this current term from the Supreme Court. It might be expected to come later in the summer when the Supreme Court sits for their new term. But so we might still be waiting for a while. But again, this clause has a case involving this clause has now reached the Supreme Court, which is really pushing questions over Trump's power to dismiss the Federal Reserve Chair, Jerome Powell.
OK, Bloomberg's Valerie Teitel with that context in terms of how we should be thinking about the president's power to remove or not the chair, of course, of the Federal Reserve before his term ends next year. Valerie, thank you. To the earnings story right now. Tesla set to report first quarter earnings later today amid a growing backlash to CEO Elon Musk's ties to the Trump administration. Charlie Wells is here with more. Charlie, what are we expecting? What are you going to be looking for then when it comes to the earnings story from Tesla later today?
Yeah, Tom, so it's a code red moment for Tesla. That's at least according to noted Tesla bull Dan Ives at Wedbush Securities, who earlier this week issued a very strident warning to investors saying that Elon Musk needs to step back from the role that he's been playing in the Trump administration and really focus on running that car company. Now, this comes that there's a lot of concerns about Tesla's year so far. They gave an update earlier this year about disappointing sales from the first 3 months of the year, and there are going to be questions on this call about the forward movement of this company. What can they do to kind of boost that annual revenue? And there are some projects that they've been talking about for a long time about robo-taxis. What is the rollout of that going to be? And what progress have they made on rolling out lower cost Tesla models that could potentially increase demand? So a lot of questions about the future here, but looming over this, and you just see all of this red here, is that issue of code red that Ives was talking about, that issue of politics and how serious it is when a brand polarizes itself, because we know that for so long in American capitalism and American consumption, companies have veered towards the middle, trying not to make their products polarized. This is the opposite direction. There's going to be a lot of questions about that, Tom.
OK, we'll see if they can answer that code red moment as it's been described by Dan Ives, of course. Some European companies as well, large ones, reporting this week. What are you going to be looking at when it comes to the European earnings story, Charlie?
Yeah, Tom, so the big question is, how are tariffs going to play out across the continent, and not just in direct ways, but also indirect ways? So today and on Thursday and across the week, we're going to get a sense of how some of these indirect tariff effects could impact some of the largest companies on the continent. So we're going to get SAP later today. That's the largest company in Europe, and they're down, but not quite down as bad as a lot of their European tech peers. And one of the issues here is that SAP, and as you can see, down, but not down quite so bad, even across some of their global peers, they're a little bit insulated from some of the revenue impacts of a potential downturn induced by tariffs, because they've got this huge secular trend, this movement of clients from on-premise computing towards a subscription-based cloud movement. And so that is something that could insulate SAP. But the question is, how long does that last? If we get a tariff-induced downturn, can they continue to bring in these new deals? And I'm talking about the indirect effects of tariffs. We also need to think about banking. So I want to take a look at BNP. They are going to be reporting on Thursday. And the question here is, is BNP going to get the same kind of trading boost that a lot of its U.S. peers saw? It's looking like some of the projections could give a bit of a trading boost off the back of that volatility. But is it going to be as big as those U.S. peers? That's a big question. And again, if we get into a tariff-induced recession, or at least a downturn, loan loss provisions at this bank are looking like they could tick up. And another idiosyncrasy of BNP is they have this large trade finance unit, which could come under pressure as the global trading order comes under attack.
Bloomberg's Charlie Wells with a breakdown of a preview, what to think about, what to watch when it comes to Tesla earnings and the earnings stories, of course, out of the banking sector in Europe, SAP as well. Charlie, thank you. To Japan now and the impact of tariffs there. The CEO of Japanese beverage giant with that global footprint, Suntory Holdings, says the current situation regarding US tariffs is concerning. Takashi Ninami told us why he sees the additional levies hurting both the American and Japanese economies. Take a listen.
If the current tariff negotiation continues as it is, we will be perhaps impacted negatively, perhaps from 1% to 1.2% against GDP negative.
That's for Japan.
Right. So that's really concerning, especially like Hiroshima, where Mazda is operating. They would lose lots of jobs.
Yeah.
So we have to be really anxious, and we are.
And we're not even talking about the U.S. economy, which could also obviously face inflation. Are you seeing any changes in your business?
Yes, I think definitely consumer confidence has been waning tremendously. And consumers are not spending willingly nowadays, so they go to the economy instead of the premium products. So that's really concerning too.
You're already seeing the shift in consumption trends towards affordable products.
Yeah, right, that's right.
The thing right now is that President Trump really wants these tariffs in order to bring investments back to the United States, in order to bring supposedly jobs back to the U.S. How difficult is it for businesses to make those commitments in the U.S. market when it's so uncertain?
Well, under the current situation where U.S. economy might go into the recession, it's harder and harder, right? If the economy is good just like before, around the time the U.S. productivity is pretty high, above 2%. That's why U.S. attracted investments from the world. If that situation continued, we would have a strong appetite to keep investing in the United States. So current tariff situation is losing the appetite from other countries to the United States. So this is really, killing the appetite from the world to the United States. So we are losing the appetite to invest in the United States. As a matter of fact, if the economy goes into the recession, right?
Basically, what's happening is that, at least for now, these tariffs could be backfiring on the health of the U.S. economy.
Exactly.
The logic from the Trump administration is that he wants to change what they call unfair trading practices. Are you concerned long term that this might be an end to rule-based globalization, free trade?
Not really, because Japan and other countries are promoting CPTPP, for example, and RCEP. And China is another locomotive to promote the free trade. So whether it's a good thing or not, I think we will be promoting the free trade in, for example, APEC, including perhaps eventually India. So with that, the U.S., some countries, including Japan and China, we want to promote free trade.
Can the rest of the world carry the global economy without the world's biggest economy?
I think so. This time, a lot of countries got understood that the U.S. is not the country to support the free trade. And the U.S. denounces the free trade. Bringing the bad situation to the United States. But the free trade creates the, good job creations and, world trade, in history. Lots of innovation happens. So I think Japan should be a flag bearer of free trade, and we will.
Okay, Suntory's CEO speaking with the Asia Trade co-anchor Sherry Ann in Tokyo. Coming up, the latest attempt to fill the gap on growth funding for European tech startups. We have an exclusive interview with the founder of Atlantic Vantage Point. That is coming up. This is Bloomberg. OK, let's turn to the European tech space now. The latest attempt to fill the gap on growth funding for startups. Atlantic Vantage Point, formerly AXA Venture Partners, is teaming up with the European Investment Fund to strengthen the continent's late-stage funding landscape. Joining me now is François Robinet, the Atlantic Vantage Point's founder and managing partner. François, you and the team managing, €2.5 billion of assets across 4 investment strategies. You focus on investing in themes like quantum, in terms of SaaS software, fintech as well. Talk to us about where Europe stands now. How much work, how much progress has been made in filling the gap when it comes to late-stage funding for European tech startups?
Well, good morning, Tom. Thank you for inviting me this morning. Yes, indeed, the market is changing in Europe. I mean, the journey of, financing the innovation and tech ecosystem has started like 20, 15 years ago. And it has followed the usual way, starting with venture, going to early growth, and now a need for financing of growth company. I mean, we see in the market in Europe now many companies that were like started 5 years, 10 years ago that are now reaching, some of them, a growth stage, that are becoming leader in their market, in their product category, and that still want to grow. This company needs financing. The reality is that, so far this financing round have been made thanks to US-based platform or sovereign fund, which are, excellent investors, of course. But we thought at AVP that, it was a good idea to provide an alternative to entrepreneurs in Europe that want this large round, around 100 million or more, alternative with an investment platform that do invest in the US, yes, but also that has his DNA in Europe, with European roots. That's what we are doing now. We are launching a 1.5 billion fund, which goals is only to do that, to invest in companies in the US and in Europe, and a big part in Europe, to support these companies that are reaching growth stage and that are candidate for an IPO, in 3 to 5 years.
And part of the fallout as a result of what's happening in the US under the Trump administration is a focus on strategic autonomy in Europe. To what extent is that a catalyst when you look at investment opportunities?
Well, actually, we decided to, since the beginning, AVP has been, focused on the two continents, North America, US, but also Canada, and Europe. So we decided to launch this growth fund before the Trump administration, arrived, I would say. And now I would say it's a two-side story. First, tech is a global market. I mean, a tech company, by definition, its market is global. And I don't think that, this will change. I mean, we will not go backward completely. It's inconceivable. It doesn't make sense. And by the way, although the tariffs will impact clearly the global economy, services at this point are not affected by tariffs. Software are not affected by tariffs. Let's see what's going on. But, I still believe that to some extent, technology will be protected from this. On the other hand, you're right. I mean, there's clearly a wake-up call, and sovereign, autonomy. It's now it's a topic, and that's why I believe it's a good idea for entrepreneurs in Europe to have investors that are in their, in their country, that are in their time zone, that share the same culture and the same DNA, and that are able to invest in their company to support them.
François, before we let you go, because time is running short, what is getting you most excited right now across European tech?
Well, there are many things. I mean, if I tell you that AI is changing the world, I don't think I'm going to be very original. But that's true. I see, and I was in California when 30 years ago when the internet started, and I see exactly the same. We are in the middle of it, so maybe we don't fully realize it. But AI is changing the world. I have to mention also quantum computing, quantum technology. I believe that in 5 to 10 years, that's going to be a revolution. That's going to bring to society, to business, computing capabilities like that will allow them to do things absolutely incredible.
Okay, François Robinet, managing partner and founder of Atlantic Vantage Point, on the closing of that gap when it comes to late-stage funding for European tech and the focus there in terms of the opportunities around quantum and, of course, AI as well. François, thank you. There's a lot more coming up. We're going to break down the moves in gold and set you up for the earnings season as well, with Tesla coming up, of course, Alphabet later in the week. This is Bloomberg. Well, if treasuries and the dollar are not performing their role as that traditional safe haven, then where are you putting your funds? Gold, clearly a beneficiary, up 50% year to date. Fresh record highs coming through once again. Goldman Sachs now has a target of 4,000 by about the middle of 2026. Here's the story, though, in terms of the long positioning at levels we haven't seen. Long positioning right now in the yellow metal, now at the lowest level in a year, despite that rise in prices. So is this a rally that is looking a little bit stretched? And if gold is looking a little peaky to some, what are the alternatives? Let's flip the board and have a look at the performance in terms of the ratio of gold prices versus silver at extreme levels. We've only seen this level in terms of the ratio stretch between gold and silver 3 times in the last 50 years. Does silver have a role to play here as a hedge? It's only up 20% in the last 12 months. 20% only. I say only. That's in comparison, of course, to the 50% gains for gold in the same period. But 106 is where we're at now in terms of the ratio. You're typically looking at around 68. So look at silver as well, is an argument for some. Let's flip the board and have a look at the earnings season. Front and centre for us today, of course, is Tesla. You had Dan Ives of Wedbush talking about this, a code red moment for the Tesla story. We know in the first quarter deliveries slumped. They got pressure in the Chinese market. And, of course, concerns about Trump and his relationship with Elon Musk and Doge, and to what extent the brand is being impacted there. Before we get to Tesla, I should have mentioned, of course, that this is one of the biggest weeks in terms of earnings overall, and that's what that previous chart was showing. We've got Alphabet later this week as well on the tech front. Here's some of the breakdown in terms of what to watch for when it comes to Tesla. Listening out, of course, for Elon Musk, what he has to say about his relationship, of course, to the government, whether he's going to take a step back from Doge, something, of course, that Dan Ives and others would want to see. So on the earnings front, look at Tesla. Coming up, we're going to have an exclusive conversation with Megan Green. She's an external member at the Bank of England. That is a conversation you don't want to miss. Stay with us. This is Bloomberg.